Hey guys, Justin here. Welcome back to the channel. So today I will be discussing some important updates that relate to cruise and airline stocks. And I will also be discussing why I ended up selling all of my cruise and airline stocks about a month ago. And I will share with you my strategy for how I was able to turn a big losing position in these stocks into a winning position. Well, almost the winning position. I got real close, but we'll get into that later in the video. That being said, there is a lot I want to talk about in this video, but I also think there is a tremendous amount of value in this video as well. So whether you are an experienced investor or a new investor, I encourage you to stick around and watch the entire video. So what happened to me? Well, I have been following cruise and airline stocks since February when these stocks started sinking. Get it? Because they're cruise stocks. And I refrained from buying these stocks not because I didn't want to, but rather because the stocks I already owned were rebounding faster. So at the time, I opted to stay invested in my other stocks like Shopify and Tesla instead of buying cruise and airline stocks. But around late May into early June, I noticed cruise and airline stocks such as Carnival and Delta were starting to gain momentum. Also at the same time, things were improving around the world. Lockdowns were starting to be lifted, cases were going down, and countries like Italy, the hardest hit early on, were starting to open back up to tourists. And I said to myself, this is it. These cruise and airline stocks are about to soar. Get it? Because they're airline stocks. Okay. So I decided to go all in on June 8th and bought $4,000 worth of cruise and airline stocks. I bought $500 worth of the three main cruise lines, Carnival, Royal Caribbean, and Norwegian. And then I also bought $500 worth of each of the big four airlines, including Southwest, Delta, United, and American. And then I also bought $500 worth of Boeing since I considered them also one of these travel-related stocks. Now, for those of you who have kept up with these stocks, you would know that June 8th was literally the worst possible day to buy them. In fact, June 8th was the peak for all 8 of these cruise and airline stocks that I bought. So clearly I have impeccable timing. And shortly after buying all of these stocks, things around the world worsened again. People were getting sick after lockdown restrictions were lifted, and governments at the time were considering reimposing lockdowns. And the whole time, my investment in these stocks kept on dropping, to the point where my initial $4,000 investment was only worth about $2,800, which is about a 30% drop. So on July 1st, I decided I had had enough, and I completely sold off all 8 of my cruise and travel stocks. So I want to tell you why I made the decision to sell, and then we will talk about some important updates with these stocks to try and determine where these travel stocks might be headed in the future. But first, I don't want you to take away from this video that the key to being a successful investor is to be perfect. No investor is going to be perfect 100% of the time, but the truly successful investors always do one thing. They hit that like button for the YouTube algorithm. No, I'm just kidding, but seriously, great investors consistently do 2 things really well. 1, they know how to manage risk. And 2, they know how to limit their losses and make their losses work for them. So when things got materially worse around the world in late June, I realized these travel stocks would be under pressure for quite some time moving forward, and that it was unlikely that we would see a fast recovery when it came to these travel-related stocks. So like I said, I went ahead and made the decision to sell. Now again, when I initially bought these stocks, the situation was a lot different. But sometimes in investing, unexpected events do happen that can turn good investment decisions into bad ones. So why did I sell? Well, when you sell a stock for a loss, it turns that loss into a realized capital loss, which means the loss can now be used to lower your tax bill at the end of the year. Basically what this means is that my $1,200 loss can now be used to offset my income. So if we look at my marginal federal and state tax rates, I pay roughly 20% in taxes on my income, which means that by realizing this $1,200 loss, I would be saving roughly $240 on my taxes, as opposed to just staying invested. Now, I know what you are saying. Justin, that's great that you saved a couple $100, but you still lost nearly $1,000 by selling. So wouldn't it have been a lot better to stay invested and wait? And yes, you're right. Selling a stock is risky because that stock could potentially rebound. Now, if you were really smart, you would sell and then immediately buy the stock back to take advantage of any rebound in the stock price. But unfortunately, the IRS does not allow you to do this. In order to use the loss to offset your income on your taxes, you do need to wait 30 days before you purchase a stock back. Otherwise, you risk violating the IRS rule called the wash sale rule. And I won't spend too much time going over the wash sale rule since a lot of people probably know how to do this already, but the wash sale rule is basically that you cannot buy more of the stock you sold for a loss within 30 days of selling it. And the 30 days applies to before or after you sell the stock for a loss. So really it's a 60-day window with 30 days before and 30 days after you sell. And I could probably do an entire video on the wash sale rule, but if you want to make sure that you don't violate the wash sale rule, you can sell your entire position and wait 30 days before buying back the stock. Then on the 31st day, you can buy it back without any worries. So in a nutshell, this was my plan with these cruise and airline stocks. Sell all of them, wait 30 days, and then have the option of buying these stocks back at hopefully a lower price than I sold them at. And if you are familiar with options trading, I basically did a put option here. And I like to call this a poor man's put option. Basically, instead of paying the premium for the put option, all I have to do is sell and wait 30 days, and then hopefully the stock will be trading lower and I can buy back in at a lower price. Now, one more thing I need to mention about using this strategy is that you can buy back the stock you sold for a loss, but the loss will be added to the cost basis of the new shares you purchase. And in rare circumstances, it might actually be a good idea to violate the wash sale rule in order to take advantage of a rebounding stock. Let me explain. Let's say on July 1st, I sold these cruise and airline stocks and realized my $1,200 loss. But then a week later, miraculously, a vaccine is created and starts being shipped all over the world. This, of course, would send travel stocks soaring. I could then take my $2,800 and buy these stocks back within the 30 days, which again violates the wash sale rule. But it might also result in me netting, let's say, a 100% return on my $2,800 investment. Therefore, my $2,800 would now be worth $5,600. Now again, I wouldn't be able to use the $1,200 loss to offset my taxes on the income I make, but I also wouldn't care because my initial $4,000 investment would now be worth $5,600. So you can see that sometimes it is worthwhile to violate the wash sale rule, but generally you want to avoid violating the wash sale rule if possible. If you want to understand more about tax loss selling, you can click on my video where I explain how to calculate your total capital gains and losses. Otherwise, just drop a comment below if you have any more questions on this, and I will do my best to answer your questions. Just remember, I'm not a financial advisor. Now, this strategy using tax loss selling to save money on our taxes is not a bad strategy, but we can take it a step further and recoup even more of our money by using something called the tax loss harvesting strategy. And tax loss harvesting is a strategy where instead of selling a stock and holding that money as cash for 30 days, you can instead sell for a loss and buy a similar stock that you believe has the potential to earn you gains over that 30-day waiting period. This strategy is particularly useful if you invest in index funds such as the S&P 500, but it can also be used if you invest in individual stocks. But when it comes to index funds, it's particularly useful because performance-wise, there is not a big difference between the S&P 500 and the total stock market index. But the IRS still considers them different investments. Therefore, by selling one and immediately buying the other, you reduce your risk of the market recovering while you wait the 30 days to satisfy the wash sale rule. So let's say you currently hold 100% of your money in Royal Caribbean stock, and you are sitting on a big loss in that stock right now. Well, you could sell and realize that loss, and then you can also immediately use that money to buy Carnival stock. Therefore, if good news comes out that results in cruise stocks rising, you would get the benefit while also getting to use your losses to save money on your taxes. So overall, how did this strategy work out for me? Well, it looks like this strategy is going to work out really well, actually. I sold on July 1st, which means I can buy back all of the cruise and airline stocks that I sold on July 31st, while still being able to use my full $1,200 loss to save money on my taxes. Also, currently most, if not all of the stocks I sold are trading lower than what I sold them for on July 1st. So my poor man's option looks like it will most likely pay off, and I will have the option to buy these stocks back at a lower price. Also, the $2,800 I had left over from my initial $4,000 purchase, I immediately reinvested into my other stocks with a big chunk going into Tesla stock. So I don't know exactly what my return on that $2,800 is, but Tesla was up 46% from July 1st at its high point and is still up 26% as of today. So I was able to return a good percent on that $2,800 over the past 30 days since I did invest most of it into Tesla stock. And before you think this is as good as it can possibly get, there is one more way I have saved money over the past 30 days. Since my poor man's option paid off and cruise and airline stocks are trading lower than when I sold them, I get to count that loss as money that I saved by not staying invested. So overall, overall, let me break this down for you. My initial $4,000 investment declined to $2,800, resulting in a loss of $1,200. That means I have a calculated tax savings of roughly $240 if I use the full $1,200 to save money on my taxes. I then was able to gain roughly a 26% return on my remaining $2,800 by reinvesting most of it into Tesla stock, resulting in a return of around $725. But I also saved money by selling instead of staying invested. And if we look at my Pi and M1 Finance, we can see that these 8 stocks dropped by 6.5% since July 1st, which means I saved an additional $180. This brings my initial total loss of $1,200 all the way down to only a loss of $55. So as you can see, I was able to almost completely wipe out my losses from a poorly timed investment, and now I am set up to take full advantage of the rebound in cruise and airline stocks when they do actually recover. Now the big question you probably have for me now is, am I going to buy these cruise and airline stocks back on July 31st? Well, that's a good question, but honestly, I don't think I am in a rush right now to buy these back. Also, at this point, with how bad things are getting around the world, I don't think we are going to see a full recovery in these cruise and airline stocks until there is a vaccine that comes out. Now, keep in mind that stocks trade in response to future events. So as soon as there is a rumor about a vaccine that will be coming out in the future, these stocks will most likely rally. But vaccines typically take a long time to develop. And while governments around the world and in the US are moving as fast as possible when it comes to developing a vaccine, it is something that could still be up to a year away. The other thing that could make these stocks pop is that if herd immunity happens a lot faster than we anticipated. But that is not something that is going to happen tomorrow either, so these travel stocks could be under pressure for quite some time. The other thing that you need to keep in mind is that the extra $600 in unemployment benefits will expire at the end of the month. And Congress is still working on a new bill, but they have not gotten a date for when that bill will be passed. So we will see millions of people's income around the US fall significantly in August. And this could lead to pressure on the market as a whole, which would also drag down cruise and airline stocks further. But overall, guys, I do think it is important to stay invested no matter what, because you are going to lose a lot more money by holding large amounts of cash rather than staying invested over the long term. But hopefully this video has helped show you how you can take advantage of a losing position by using this tax loss harvesting method. And if you are sitting on big losses with cruise and airline stocks right now, you might consider using this method, especially since it looks like cruise and airline stocks will continue to face pressure for the rest of this year. Also, one more thing that I forgot to mention was that the CDC did push back the no sale order all the way to September 15th. This is a significant development for cruise stocks, and so I do think you still have some time to do what I did if you are sitting on big losses with these cruise stocks. But again, there are risks involved with any investment decision you make. So even though this decision to sell worked out very well for me, there are no guarantees it will work out the same for you. But again, things are just so unpredictable right now that no one can say for certain what is going to happen over the next month. So for me, I will keep an eye on these stocks, and if they do drop significantly, I will consider jumping back in. But I will probably avoid buying these stocks even if there is a rally that happens until there are significant developments in terms of a vaccine, for example. Because I do want to make sure that I don't make the same mistake twice by jumping into a rally that's unjustified. So if you guys want to see some of my other videos on cruise and airline stocks, you can click one of those videos now. And if you are not already subscribed to the channel, you can go ahead and click that red subscribe button, or just click my face. It should be somewhere on the screen, so you can click that and get yourself subscribed. Also click the notification bell, and that will alert you whenever I upload a new video. So with that, guys, thank you so much for watching, and I'll see you in the next one.